Today we will look at our last specialized multi-column journal. This one is pretty much the opposite of the one we looked at just recently. That was the cash receipts journal where we gain money, we receive cash, and this is obviously, as you see, the cash payments journal. This records money that we pay out of our business. So again, as we have done before, we'll look at the columns, the parts of the journal itself. Starting at the left with the date column, as always, account title. Again, this doesn't say a debit or a credit. This will list, in fact, people that we owe money to that we are paying, or accounts that we will be using when we pay money out, and then we'll see how all of that works. Next column is the source document column, and these will typically be checks. Businesses normally will be paying all of their bills by check, so the check number will constitute the source document for the transaction. Posting reference column we will be talking about as always, and as we've had in the past in some of these journals, we have a general debit and a general credit, and as you see on this sample, we will be using this at least general debit column fairly frequently in this journal. Next one, accounts payable debit. And again, the accounts payable account is a liability account. If we are paying on a liability, we're paying part of it or all of it, that means that liability account will be going down. Accounts payable is a liability account. If it goes down, it decreases on the debit side. We don't need accounts payable credit in this journal because that would mean we are increasing the liability, and we would be using a different journal for that. Then a new column, this is called the purchases discount credit. This is basically the opposite viewpoint of the other account we had recently called the sales discount account. Companies will sometimes give customers a discount called a sales discount, and sometimes we, as a business, will receive a discount, and we call it a purchases discount. Companies will give us some terms that will allow us to pay early and at a reduced price. This is called a purchases discount, and it is going to be a credit, as we'll see in a few minutes. And then the final column, cash credit, and as you know, cash will decrease on the credit side. The cash debit would be found in the cash receipts journal. So the cash credit column will be used in every transaction, as we will see in this journal. So let's take a look at some sample transactions. First one dated January 3rd. We are paying electricity expense, and that would be normally a monthly payment, and we pay by check 516, and general debit is going to be used here. We don't have a specific column for an expense account, so we use general debit, and when we post this, we will go to the electricity expense account and put the account number in the posting reference column. We're not quite ready for that yet, so we'll look at that later. So the transaction is debited in general debit, which will go to electricity expense, and there's no discount, nothing else. We're not paying an accounts payable, we're not paying a liability account here, so accounts payable is not used, and cash is credited. Very simple transaction. We've had this kind of transaction before in the general journal. Next one, January 4th, and this is relatively important, and I want to explain how this works. This is a debit to office supplies. We are buying office supplies, and source document is check 517, and you see a debit in the general column. We don't have a column for office supplies, so we use general debit 9540, and we use cash credit 9540. We're paying for office supplies. Now let's think back a little bit. A few days ago, we had a purchases journal, and whenever we had purchases, we use the purchases journal. Question would be, why is this not a purchase? We're buying office supplies, sounds like a purchase, but we're putting it in this column and not the purchases journal. The reason is that the purchases journal will be used for purchases of inventory, purchases of things that this business will resell, or perhaps purchases of raw material that we will manufacture and sell. So the purchases journal will be used for things that will be related to the inventory of the account. And we use that because the purchases journal will provide information that we will need when we figure cost of merchandise sold. You remember from semester 1, we had quite a bit about figuring and accounting for the cost of the merchandise that we sold. We don't sell office supplies, so this would not be part of the cost of merchandise sold. So it would not be put into the purchases journal. So we have to think about what kind of thing that we're buying. We're not buying inventory here. We don't sell our office supplies, we use them. But it is an asset, something of value, and we are purchasing it, but we don't put it into that journal, we put it into this one. So we may need to review that a few times to make sure that's clear for you. So office supplies, an asset account debited because it goes up, we've got more office supplies, cash goes down because we paid for it. Now, let's take a look at January 9th. Timken Steel Incorporated. We will find that that is a creditor. We owe money to them, and now we're paying them. Check 518 indicates that. And let's take a look at, to the right here, I've given you some information. Our business bought some information, something from the Timken company. Probably this was inventory, and it would be found in the purchases journal. And that would have been recorded on December the 10th of 2018. So about a month ago. Our businesses bought something for $314.90. Terms were 210 and 30. Remember, 210 means 2%. If we pay it within 10 days, we would have gotten a discount, or the net amount is due in 30 days. So obviously, if we purchase this stuff, whatever it might be, on December 10th of 2018, well, we are well past the 10 days, so we don't get the 2% discount. So, Timken Steel Incorporated, we're paying $518, using check number 518 to pay the bill. Accounts payable is debited because that is a liability account. It goes down. We owe less money, and we did not get a discount. So there's nothing in this column, and we are paying $314.90. So when we post this at the end, it would be posted to accounts payable debit as a part of this total, along with anything else that would be in this column, to the accounts payable account on the debit side. But also in the posting reference column, we would be posting this amount to an account that we have for Timken Steel. That's one of our creditors. So we would also need to debit their account to show that we owe them less. Let's look at January 15th. We are paying a mortgage. Mortgage payable is a liability account. It's not accounts payable, but it is a liability account. We use check number 519, and we debit $1,800. And again, it's not accounts payable. It's a different liability account called mortgage payable. We keep that separate because that's a little different than our typical accounts payable. Remember, accounts payable are things that we owe that are typically due within a month, a short period of time. A mortgage payable is typically a long-term liability, sometimes 15 or 30 years in length. This is a monthly payment of $1,800 debited here, and eventually we will go to this account, and in the posting reference column show the account title, or the account number, that this 1,800 is posted to. It would be debited because the mortgage payable account is a liability, and it goes down a little bit each month by the amount of 1,800. And obviously, because we wrote a check, we credit cash. Let's look at January 21. Quality Manufacturing Company. Source document is a check. And this time, let's take a look at the terms. Our business bought this on account $1,500 on January 17th. It was probably a purchase of inventory, so that transaction would have been entered into the purchases journal on January 17th. The terms were 210 and 30. So again, we get 2% off if we pay it within 10 days. And in fact, we did. We purchased this on, as you see, January 17th, and this is January 21. So we are within the 10 days, so we can take a discount. So accounts payable is debited. So we will debit the entire amount that we owe to this Quality Manufacturing Company. We owed them $1,500, so we debit $1,500. But we take a discount. A purchases discount will be entered in this column for $30, and that account is a contra account, which will indeed be a credit. As you remember, when we make a purchase, that account is debited, and this reduces it a bit, showing the discount of $30. That's the 2%. So we actually paid not $1,500, but we paid $1,470 with a check. So a little different than we had back with Timken Steel, because this time we were within the 10 days, and so we were able to take the discount. Another expense account, January 25th, pay telephone expense. A check is the source document. General debit, which would be posted to the telephone expense account, and cash is credited. Expenses typically are not going to be offered. We will not be offered a purchases discount for an expense. And finally, the last one, January 29th, the Hansen Company, we paid by check, and we debit accounts payable because we owe them $750, and that is now going to be reduced because we're paying that amount. But we did have some terms. This time, the terms were a bit different. We purchased this on account for $750 on January 16th, again in the purchases journal, and the terms were 5, 15, and 30. The 515 will mean 5% discount if you pay within 15 days. So we have a better arrangement here with this company. So if we purchase this, let's look at this. We made this purchase on January 16th, and we're paying it on January 29th. So if you count up the days, we are within the 15 days, so we can take a 5% discount. So we debit the $750 to clear up the amount that we owe them, and that would also be debited to their account, and we would put something in the posted reference column to indicate that we debit the Hansen Company account, which lowers it from $750 down to $0. But we also have it in this column because it will be debited also to our accounts payable account. But our discount is taken, and if you compute 5% of $750, you'll get $37.50. So we can deduct that from the amount that we owe. So we actually pay them a bit less. We pay them $712.50. So those are some typical transactions in the cash payments journal. And as with all of these journals, you can go back and look at this video again. You can pause it and go back and review it and do it more than once if you need to be sure you're clear on how these transactions work. When we get to the posting process in topic number 11, as we did with the other journals, we will post the total of these columns. So if this goes to cash credit, we would go to the cash account. Let's say it's 101, and that would indicate that we have credited cash